or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Try it again. Good morning. Starting off with a sound glitch. That's always fun. Market Thunder. Here we are on Wednesday, the 11th of June. It is so boring. Mitch and I were talking. I'll bring Mitch in real quick, but Mitch and I were talking just a little bit ago. There literally is nothing going on. The ranges, as I mentioned, are contracting for this time of year. There's historical lows from the amount of volatility we're getting in movement, and it's boring. It's summer, so we're gonna have to get some beach scenes or something coming up here, and trying to do some things that will give us some interesting views of the world. Literally, I went through all the news stories, couldn't find anything, nothing of interest other than Cantor losing the election, and that's about all that was out there, actually. So from a market standpoint, we're seeing just a little bit of pullback. Just talk a little bit about the commentary. What we're seeing here is just a minor pullback. I mentioned a couple times, I think 2 days in a row, this 1932.60 number. I don't see the market getting down below that. It's probably going to just stabilize here. It's just they're waiting for, I think, tomorrow, what little news we do have coming out, looking for some type of stimulus. There's just nothing out there. I haven't watched any CNBC, but I suspect they're doing a financial magazine thing because there's nothing else to talk about. The producer is scrambling to find things to talk about. So from my viewpoint, we're seeing pretty much from a technical standpoint what we should see. From a fundamental standpoint, it's anybody's guess on what's really going to drive this market next. And I did see one story where what's his name? I'm not sure it's right, Blankenfein or something. The guy from Goldman. He was talking about the markets being complacent, and this is where the surprises come from when the markets go down. Based on what we're going to talk about here in a few minutes, that's probably not going to happen. That's not the pattern at all that's going to unfold. So let's go over. Speaking of that, let's go ahead and just get started on some of the technical aspects of the markets and start to see at least a little bit about what's going on here. We're looking at the futures here. This is the 5-minute graph, and you can see we're kind of bouncing down here. I suspect we're going to see a similar pattern we've seen in the last couple of days, where we see some moderate declines, and then the market rallies toward the end of the session, and we end up 50 cents, down 50 cents. It looks like the same sort of pattern that's unfolding. Look at the hourly graph, and this is, remember, the 24-hour graph on the S&P futures. And we had the typical cycle come in this morning, right about the lows. It's been hitting, this has been a low cycle that's been hitting just about for the last 2 weeks. This has always been the time where a low is being printed. I guess that's because we're in this uptrend. And what we've seen here for the last few days anyway, we're just seeing some sideways movement here, and I wouldn't call it stalling. I would call it more of just a consolidation and pausing to refresh. There's not much that I see excesses in the marketplace. Let's go ahead and look at a couple other graphs here. I believe, yeah, this one is going to give me the VIX. This is the weekly. I want to get rid of this market. Let's do this so we can get. This is the weekly web formations that I've talked about before, and what I want to do is just take the strategy off so we can see this a little better. Not a lot going on here. We're starting to see one of these little humps that form, so we could see a little, maybe a 1 or 2 week stall. It really depends on how we finish the week. It looks to me, the way the cycles are setting up intra-week anyway, that we're going to see a continuation of the pattern on a weekly basis. And I'm just looking at my sheets. I wanted to bring up the weekly numbers for this week, and we're looking at one of the key numbers here is around the 1954 level is pretty much where we've been, about 10 points higher. So there's not a lot going on here other than this consolidation. We're seeing the VIX index up a little bit, 1126. It was down to 1070 the other day. And I recall back several months ago when we were in one of the surges, and some of the research I've looked at is it appears to me that we're going to see some sort of we're going to see the VIX actually get into a very low level before we will actually be able to see the markets see any type of top. So I'm thinking somewhere in a 9, maybe 8 point level on the VIX. Right now it's at 11. I think that will be what Blankenfein was talking about. That will be the true sign of complacency. I don't see where we are right now at that level right now. I think there's still, the patterns that are emerging are still very, very positive on an intermediate and longer term basis, and the short term pattern is just consolidating right now. So there's not a lot here. Let's go over and take a look at that. This is Google, so let me get that off the screen. And what we want to do is bring up the S&P. Here we are. This is the monthly, but let's go over and look at the weekly numbers here. 0.43 as on as far as the PPMs go, 0.43 on PPM 1, PPM 2, 0.27, and 0.40. That's not going to change because the markets are pretty stable, plus or minus about 0.25%. So that's just in this range. This pattern is continuing. There's not any signs of it breaking down or failing or any of that stuff. So I know everybody's nervous that the first downtick is like, oh no, there it is. Don't panic. It's all good. The trends are pretty alive here from that standpoint. If we go over here and look at the daily, you can see this even more so. Let me see if I can consolidate, and that's not going to work. Let's see if I can make it a little bigger so you can see this last trend flowing here. This is just more of the same pattern. The 10-day moving average right now. If I bring up that indicator here, let me move that so it's not behind me. The 10-day is, at the moment, we're looking at 1935. I talked about this a couple of days ago. This is one of the reasons. 1932 is a Fibonacci support number. 1935.83 is actually the 10-day moving average, which is rising at 0.19. So we've lost a little of the VIG, as we used to call it, on the floor. Some of the upside pressure has dissipated a little bit. 0.25 is the trend mode. So we are below trend modes on all three of these. So there's some vulnerability to that, but I think the range and on the extreme range is going to be that 19, where this 10-period moving average is, and it is rising at 0.19 per day. So it's about 3 points. So tomorrow it's 38. And so there's lots of support just under this market. And like I said, the Fibonacci support is the 1932 level, and that's not likely to be violated in this particular mode anyway. So let's take a look at trying in an effort to try to find something as I'm digging through the all of this the straw bale here, looking for something. This is the hourly graph that we're looking at, and this is the cash hourly. We were looking at the hourly on the futures, and this is just the session chart that we're looking at. You can see we came down to the 40 period moving average is where we found support. The PPMs are attempting to turn around, which would suggest there's some upside coming. This goes with the pattern that I talked about a little bit ago of expecting to see the markets firm up from there, and that's pretty much all we got. One of the charts, did it come up? It did not. Trying to remember what I called it now. Let me open a workspace real quick. Because one of the things I mentioned the other day, let me I always forget to put my glasses on. I got them all clean for the show and then didn't put them on. So here we go. What I'm trying to find is this. Here it is, international spread. This is the charts that I've talked about for a while here, or just started this last week. But this is the differential between the EFA and the EEM, and I believe this is EEM. You can see there's a slightest little uptick today. The overseas markets did a little better than we did, and this one's EFA, that was EEM. You can see EFA kind of flattened, but the emerging is starting to show a little sign to outperform, and this chart goes back all the way to 09. So this is a long-term chart. So this is going to, the way that we've been leading the markets of the world, when we stop leading, there's probably going to be a rotation of some sort, and then that's when I think we're finally going to be vulnerable to a more a correction of some sort. I think, as I talked about before, what we saw last show, I believe we looked at some of the stuff, like we looked at IJR, and we looked at some of those, which is the small cap indicator. And when you look at these, you can see they have a little different pattern. This is the one chart that has been lagging. This would be somewhat similar to a Russell 2000, and it's lagging a little bit. There's no objectives, there's no momentum, although the PPM 3 is at 0.35, which is the longer term support. So we've tested that, and now we're setting up a pattern that most likely is going to start to re-emerge as an upside. So it's very possible, if you recall, when we went over the dashboard, I think it was Monday, right, Mitch?
Yep.
Yeah. We saw most of the rotation we saw were in the small caps. So that is pretty much what this is telling us here, is that this small cap rotation is likely to continue, because it's lagged. This is where the correction happened. So it was a rotationary correction that we saw. So we saw mid cap, small cap, primarily small cap, and see a rotation in the index itself. So the correction happened in the background, not in the foreground. Meanwhile, the S&P went flat. I believe it was 13 weeks, something like that. And now we're seeing this market has bottomed. It's for sure bottomed, and likely to see it move back up. And maybe there's no current even Fibonacci objectives at the moment to call, but the underlying 40 period moving average, or PPM 3, is at 0.35, which is a trend level, which is suggesting the underlying trend is still pretty positive, and that supports under the market. We'll take a quick look at MDY as well, just to get a feeling for that. This has a much stronger look. It wasn't as weak. Once again, let me get rid of this. Get the strategy off there so we're not looking at buy and sells there. That is right here is showing a pattern. It's breaking out of this pattern on the upside, and this is significant, I think, from the standpoint of how all of these patterns are unfolding. The S&P led, mid cap is lagging a bit, but is actually showing some pretty good characteristics. The PPM's 0.32, 0.22, and 0.39, all pretty good trend levels. So there's some pretty good support underneath this market. You're not likely to see any declining anything out of this. No substantial declines here. And if it does decline, it would be an opportunity to add into positions, not an opportunity to sell. So that this is continuing on as far as that goes. Let's see here. Let's go ahead and take a look at some of these other markets that we've looked at before, and let's go over to the Treasury market. And the Treasuries, as I discussed, I think early on Monday, is that these are actually showing that there's a lot of resistance. 262, 264. Don't see yields getting above there. If they did, I think 268 was the extreme. So we're seeing some momentum shift for higher rates, and there's really not any risk. Maybe there's some minimal risk if we went over this area right here. Bring this up real quick. If we got over these highs right in here, which was, let's see here, 280, that's a long shot here. There's not really anything there that's going to even at that point be a concern as far as the equity markets go. And like I said before, possibly if we do see any further surge, that's money coming out of treasuries to go back into the stock market. And people are looking for ideas on there. And nice thing is, like I said, there's a lot of really good stocks in the small cap area that have corrected a lot that are going to actually be attractive to the bargain hunters out there and the people that are scouring through all of the different stocks trying to find something to play. And all of these indexes, whether they're Dow Jones, S&P, all of them are a cap-weighted index. So just like when we went through the top 25 the other day, that top 25 exists in all of these indices. So there's still a driving force by a small group of stocks that keeps these indices moving higher. Really, we can take a look at the daily to see anything. This is interesting, actually. That I haven't looked at this for a few days, and let's bring that up because that's more surprising than I thought. We have a high target 286 to 277 with the extreme range of 286 to 292. So that's off the daily charts. We've seen these get generated before, but look at the momentum on the short term. PPM 1 is 0.74. The other two are flat, but there's been a big surge here just with this small price change that we saw over the last 2 weeks, where we went from 240 to 262. So there is some interesting things on a short-term basis happening here. Whether we can get to that 277, there, like I said, there's quite a bit of resistance on the intermediate charts, which I think are have a stronger bearing on what's going to happen with the technical patterns here. So yields are most likely going to be in check here. I don't see them getting over 268. I guess it's possible, but this pattern suggests there's some momentum building, and I'll have to keep an eye on this. We'll review it back on Friday when we come in. So I'm really hoping that Mitch has got a whole bunch of stocks to review today as I'm going through this. We haven't talked about currencies for a couple days. My Japanese yen is actually moving up pretty good, about almost 0.5% today. This pattern, this is the daily chart. You can see it kind of went down a few days ago. I've talked about this pattern continues, and now we're starting to see a surge of a sort, but not anything significant. And the the weekly chart is just flat. But I'm telling you this, maybe for your own account, I don't know. This has really caught my attention. I've got a position here that it's not doing much, but it sure looks like it's going to. I've talked about this before. 110 to 120 range, which is going to be a pretty good move, 15-20% move, and there might be a lot more once this thing starts to get some steam if we get up there. And rumors are George Soros is poking around in Japan, putting some money around there, and he's got some pretty good heads around him. I had a buddy of mine that worked there, a guy I met through a friend of a friend kind of thing, but he was pretty tight-lipped. But these guys they don't think like the rest of them, and they have enough money and influence in some of the circles they hang out that they can get some other players to show up. I used to call them, when I was on the trading floor, we used to call them the promoters, the guys that wanted to tell you the positions they had on and tell how good they were, so hoping that you would jump in and buy and help them out. And there's always that element around the market, and that's pretty much what the folks you see on CNBC and newsletter writers and all that kind of stuff,
Classic pump and dump, right?
Well, not really a pump and dump, but they try to get on this level when you're playing with currencies. You can't pump and dump on a little 5-cent penny stock. You can certainly do it, but you can get some things going. You get some forces flowing and getting everybody seeing these same charts on these, and you can get a pretty good stampede going. Let's say that.
Sure.
So let's see here. We went through. Let's take a look at the euro real quick, and that's continuing a little bit under pressure. I guess if it costs money to keep your money in the bank, maybe you want to get it out. Maybe I don't know what they're doing with their money. So it's still kind of interesting, but the euro is down to 135. It got up to the 140-ish range, and it's down a little bit. And as I've talked about, the big move in the dollar that is going to happen is probably pretty much yen specific. It's obviously done better here against the euro. When you look at the dollar index, matter of fact, we'll go do that. When you look at the basket of currencies, it looks much different than all of these above, because although the euro is one of the largest weightings in that index. So let's just go ahead and let's take a look at that. So here we go. You can see it looks very similar to some of the others that we've been looking at. Flat line, starting to see some momentum, trying to break out of this pattern. We'll have to see. Maybe if the treasuries, everything's kind of pointing, the treasuries and the dollar are pretty connected right now. And so it looks like that, if treasuries were to pick up a little bit, then we might see a move up toward a higher price there, where we start to see maybe you get back in the 84, 85 range on this currency, but on the dollar. And this is it's a basket, not much to look at. We'll take a quick look at the daily patterns, and the daily patterns are staying within the context of the moving average. You got 0.2, 0.3, and 0.03 on ppm 1, 2, and 3. No momentum here whatsoever. Market moved off the lows, but now it's lost all the momentum. Nothing's really going. The pattern overall, though, is positive. There's a slightly higher range being projected here by the Fibonacci. As you can see here, 81.22 to 81.39. Currently 80.75. So there's not much there, but it does look like the dollar's going to move higher. The treasuries are confirming that that's probably going to be the driving force behind that. So we'll have to just see how this all plays out in the end. A couple of things that I was thinking about we could do today, since it's so quiet. We might maybe even go back and go in VPM and talk about some of the 1, 2, 3, 2 issues. Always seems to be what the difference is and some of those things that happen we'll just kind of kick it around, maybe have a conversation. I'm hoping Mitch is sitting there thinking right now of coming up with something. But it is very quiet, and I, from a standpoint of just a market analysis, it's there's just not a lot going on here from that standpoint. And looking at some of the stocks that we went through, the top 25, there were some interesting patterns out there. So this stuff is pretty boring. Anytime you're doing indexes and you get into a mode like this, it seems pretty boring. Behind the scenes, behind it, there's a lot going on. Sort of like looking at a lake that's nice and calm. It looks like nothing's going on the lake. It looks pretty calm, but if you could go under the water, you'd see all kinds of fish battles or whatever they do, fighting and eating and all kinds of stuff going on. That's how the market is right now to me. It looks like a lake that's nice and calm, but there's a lot going on behind the scenes there. So let's.
Well, Bob, one thing I wanted to ask you about is commodities. Commodities really were really popular over the last couple of years. A lot of advisors wanted to have static, stationary positions and things like gold and silver just a few years ago as it was creeping up towards the top. And I thought it'd be good to go through some pretty common commodity ETFs just to see what those are doing right now and just take a look at those.
Yeah, that's probably a good idea. We haven't talked about gold for a while.
We haven't.
And that's probably a good plan. See, that's helpful. So let's go ahead and take a look at gold. Let me get off this chart. There's no activity on this one. Let's use GLD. I think it's a better, more liquid than these futures. Still pretty choppy. This is the daily graph. So we've seen this thing kind of stair step down. It's kind of getting some legs under it from the pattern on the short-term pattern. But let's take a look. Let's go on the intermediate and just see what we see there.
And this is trading right now on the 1.2 system.
Okay. Let's put that on there. There we go. So it's been long through this whole little pattern hanging in there. And talking about, what we're thinking about here and what's going on, this pattern is continuing, even going all the way back to the beginning of the year. I thought there'd be a little more positive move on this, but it's been in check to say the least. We're looking at the last year and a half here, but if we go back to January, it's been drifting lower, and I have to pull up that report actually to see what it said. I forget what the extreme downside was, but there's still an expectation for this thing to move around 1,400 or 1,500, and I'm not sure how realistic that is anymore. This thing just seems to be dead in the water. It's like everything else. This is the Dow related, the interest rate, all this stuff is in the same basket. I think that you'd almost put it in as a currency. A lot of folks are calling this, really a currency that you, I guess a currency representative, like a basket of everything. So certainly not a lot of play there. And it's interesting just talking about, there were a lot of advisors just wanted to have a position in this forever because somehow it was going to save them.
Right.
And, meanwhile the market was going up and there was no reason to be saved. And we were out of this thing most of the time there during that decline. We did get a position back. And, I don't know, Mitch, can you bring up BPM? Or maybe I think I've got it right here. Yeah, here it is. Let me just go ahead and let's just take a look at this thing on BPM. Just see what some of the stats are out of this from that.
Yeah, in the outlook, originally you had projected that it would rebound in 2014 to the 1475 to 1650 levels.
Right.
And that would be on the B pattern. So after it bottomed out, rising up from A to B, setting up to that level.
So did it say what the lows were?
That's what I'm looking for right now.
Okay. Yeah, so just bringing this up here right now. Here's the gold.
1094 was the critical level.
Here is the GLD, and this has got 1.2. Now, why is it this not showing a position here? Oh, it is. So it's down. Current P&L is down 10% on this thing. So it's been a tough asset to hold, to say the least. It is kind of waffling down. If you're a technician or a wannabe technician, there's let me bring up the whiteboard here. This is I'm not that encouraged by this particular pattern because I always joke that there's only been 2 Head and Shoulders bottoms in history, and I've seen one of them, and that was 20 years ago. But let's take a look, and trying to find my cursor here. So right here is the left shoulder. You got your head here, and you got this. And typically, what you do is when this breaks out, you would project this out, which would put that into the numbers that we're talking about there. But so anyway, VPM does have a position in it. It's down 10%. If you had a typical allocation, that might be a 1 to 2% drawdown from a trade impact standpoint. I guess if you had a 5 or 7%, I don't know what it would be. Maybe an index, it might be a bigger trade. It might be 10 or 12. So you could have, there could be more substantial. That would only be 1.5%.
It'd still be pretty minimal.
Yeah. Pretty minimal from an impact standpoint. And if wanting to just own gold, there you go. You've got it. It's not really doing anything. The pattern that VPM's looking at is that consolidation pattern, and that's more bullish than it is bearish. So you're better off if you're trying to buy low, sell high. This is a pretty good buy low point. If you don't have this position on, there's probably a hair trigger on VPM. It won't take much more downside for this pattern to fail. So if you put it on now within this trade, let's take a look at a couple other things just to see from a standpoint of what this what this pattern has to offer. So let's take a look at the.
I had a friend in the industry who's also a VPM user chide me about the fact that we took this position and it was down, I think 8% at the time.
Right.
And the thing that I reminded him is, well, if you had been one of those advisors that wanted to buy and hold and keep it a static position in the portfolio, you would have been down significantly more if you had bought at the beginning of the year. So
right.
It's just one of those things where the fact that we actually tell you a specific buy or sell date, it gives you an opportunity to anchor from to see, are you at a gain or a loss? Whereas classic MPT approach, every day is a good day to buy, and so they get very selective, or they cherry pick the dates that they want to go from, to benchmark against.
Well, so go ahead.
Whenever someone gives me grief like that, I always look back a little bit further. I mean, if they're going to pick any date that they want to grab, I'll grab something like this, and so I grabbed the beginning of the year, and so year to date it was down significantly more than 8%.
Right. Yeah. So and that's that whole marking to the tax document. So this is kind of interesting, though. Looking at the duration of this trade is 194 of 133. It's actually exceeded its average duration. The mean is the projected maximum. We're 60 days under the projected maximum. So we've held this position for quite some time, and not a lot of reward in there. Average profit's only 12%, and standard EV is 21. Average loss 3.252. So not a lot. We've looks like at the moment we've almost tripled that.
Yeah.
That average loss, but we haven't sold it yet either. So if you look at a trade, but this is an interesting profile, because this is one of the things from that standpoint that now all of a sudden you could buy this, but we're exceeding all the holding periods and we're not getting a lot of traction on this. This might be one of those trades where it gets out, market drifts a little lower, then it rebuys it, and that second trade might be the trade you want to do. That might be the better trade of the two. And because this, what is the? Let's see if I can. I'll get this thing so blown up here. Here we go. ER ratio is 220 on it, so it's pretty good. If we go in and look at the model overview here, we've turned, we get, not real impressive. Had a 14% loss in 2013. That was fun. That was because the market was going straight up. That was what I was saying earlier. A lot of folks wanted to keep gold around just to save them, just in case, as an insurance policy, and it was a pretty expensive insurance policy. But once again, even if you had 10% to that, that's only 1.4 net trade impact to your portfolio. So it's not a lot there, but you also have to realize if you make the average of 12%, you're only going to add about 1.5% to your portfolio. So there's
And
not.
that is a paper loss there, not a realized loss.
Yeah, but the 2013.
Yeah, I mean, that's the same position. I mean,
It
all
is,
that.
okay. Yeah, you're right.
It's the same trade that we're in right now.
Yeah, because we came in September of last year.
Right.
Yeah, good call. So yeah, so now that same position is only 10 now, actually.
Right.
Its interest 2014 looks like it's up 4, so that's the differential right there. That's 10, actually.
It's not-
Yeah, so the way this works when you look at one of these charts here is you're seeing the 2013 loss, like Mitch was talking about. This was an 09, a September of 13 trade that came on, so it's been on, as I said, just 194 days, and then we're looking at this year, the gain is up 4.5% since the year started, which, which if you subtract the two, you end up with the 10% that here it is, down 10.3 something percent. So that's where this thing is. That's what this NAV is reflecting. And, and you can look, it's interesting because if you go back to 2010 and 12, this has not been a good asset to hold. There's been no point. You'd have been a lot better off finding some good stocks to pick than to try to do that. But if it's an allocation strategy, depending on what you're doing, and you want to have a dynamic allocation strategy, then this will certainly work. And we've seen it in a fair amount of portfolios. It's interesting, when we were looking at portfolios, a lot of folks, it was almost the global equity strategy with a couple other elements. Maybe somebody added in a REIT or a gold or something, or maybe a silver or something like that. That was the bulk of everything that's built out there. Looks the same, and I think there were thousands of portfolios, like 1,200 or 1,400 of those out there that had slight differences that were basically our global strategy. SPY, MDY, IJR, EEM, and EFA plus GLD,
plus the flavor of the week, whether it was gold or REIT.
Gold or REITs, and some of the REIT stuff has actually probably done a lot better than some of that.
I'm sure better than gold.
Yeah, and gold just has not been a good place to be, and it's it's one of those things that we saw even going back to 2007 and 8. Everybody wanted to have the commodity trade. They wanted, during 2000, from about 2002 to 2006, really was the big growth years. If you had steel or some kind of, commodities, or if you're playing with the some of the major players in the basic materials area, there was a lot of benefit then. But after that, it was all hindsight trade, still thinking about even the trade you missed or the trade that you had that you wanted to try another one, and that none of those things have worked since the crisis. Even with it pumped up, there's some of them that have done better, but they've done okay from a stock standpoint. But these resource funds and that, I guess maybe, Mitch, if we have some around, maybe on the dashboard, we could look at a couple of those. But there's just not a lot there from having an advantage of having them around, and they've been a drag on a portfolio, or they've been out and you've had more cash in a portfolio, which also sets up a drag because you don't have as much participating. And that's been the same case even with ETFDI, Global Equity 1, Global Equity 4. The reason why those have lagged is because you have the international elements, and it's not a pure S&P play. So you're really not matched up well. You need a world index to actually, maybe MCI world index to benchmark against, and that'll give you a better reflection of what that strategy should be doing. Overall, what it's doing is continue to generate about 8.5% compounded return over the last 10 years, which is what you want in the end. So let's go ahead, Mitch.
Well, one thing I was going to say, when you've talked in the past about the market, sort of hitting this point of resistance and then going higher to then just sort of sputter out once we get to an all-time new high and then just draw down from there. In some ways, it sort of makes me think about the chart on gold, how we saw it climb steadily up, and all of a sudden we hit the high sometime in 2011, And once we hit it, we felt fairly sharply and then sputtered around that price range for some time, and then we sort of drifted away from that. Do you see any of that similar pattern within the S&P 500, or is it just my imagination?
Not really. I don't think that same thing is happening. But it's just it's really about trends. There is no trend here, and
Sure.
that's really what it's about. There's just no trend from that standpoint to be able to really pick off of here. And we do have trends in the S&P. So
Okay.
let's.
We could also take a look at silver, since you mentioned that. That's another commonly held one.
Okay.
SLV, of course, also on the 1.2. In
Okay.
fact, most of the commonly held commodities are on 1.2.
Yeah, and the reason for that is they tend to reflect a higher, a higher volatility. So 1.2 is going to handle that volatility a lot better. So I just brought it up in VPM here, just so you can see it. It did have a trade, a similar trade where it broke out. Let me make this bigger so it'll be easier to see. And it had a break. It came out of here, and it did this trade. And this is actually just to talk about characteristics of the model. You can see on this surge over here in the middle. Let me just get the whiteboard out, because this is somewhat interesting. You've got this move right here where we bought and then we sold it over here. Then the market declined. Same thing here. We did it again, and this goes. And actually, even this trade here was the same breakout. It just kind of drifted lower on from that standpoint. So the last three trades in silver, not so good. If we look at what the actual losses were on that, probably not that big a deal, but so we're looking at actually that was a 20. That first one I was looking at was a 20%er, and then you got 2% and a 13. So nothing good's coming out of silver. So
After that initial 70% thereabouts run up, it got hit pretty good.
Yeah, and then even if you just look at the chart, there's been no advantage in buying and holding it either. So
Right.
Just having this around. I had an interesting discussion some time ago with an advisor that was telling me how silver was an industrial metal, and it was just always going to have demand. It was that you want to own it. Well, and at the time I thought it would go to at least the 20 range, and this was when it was in the 30s. And guess what? We're at 18. So I'm not sure what silver's worth actually. I guess today it's worth 18. But the bottom line is I don't know what the real value of this particular metal is. There's a perceived value, and one of my mentors and early on back in the CBOT used to always say he used soybeans as an example, but I'll relate that. You say the price of beans were made in the minds of men, not in the fields. And what that meant was the only value that it's worth is what you think it's worth, or what the market thinks it's worth at that given moment. So you always, the old saying that the market's always right, then I guess the market's right. It's worth $18, and that's the perception for today. So economic activity, 2-3% GDP across the planet, with the exception of China, which is who knows what that really is, if you can believe any numbers that come out of there. That's really the hard thing to understand, what the accuracy are. And I even question a lot of numbers that come out of the Commerce Department and other departments here. One of the ways that they've always played with numbers, I did a report probably back in maybe 86 or so, way long ago, talking about what reports did you want to watch. I used to be a big Fed watcher, watching money supply and all that stuff. And anytime you see the word or in brackets it says seasonally adjusted, it's manipulated to a point. They're doing some seasonal adjustment to make up for what it even did too much or not enough of, either way. And so those seasonal adjustment numbers are always all over the board. Matter of fact, there was a report, I can't remember the report now, but they changed it 3 times in an hour and a half. They released it, it was below expectations. They re-released it, it was at expectations. And then they re-released it again, it was above expectations. And I can't remember which report it was now. I think I mentioned it in commentary.
Yeah, it was industrial.
It was the ISM number.
ISM number.
Yeah,
It was 2 weeks ago. It was first they released it way above, and then way below, and then at. I think is how it went.
Yeah, I think you're right. Yeah.
No one knew what was going on.
Yeah,
It was pretty obvious.
and the markets were responding to it just because it was. Story said that behind the scenes that people are trying to figure out what was going on, and they've never seen that before. And so anyway, and then we had another ISM number. I think that was the manufacturing number, and then there was another non-manufacturing number came out 2 days later, and they only released it once. So that less there. So let's go through a couple stocks here while we're.
Okay. I did want to touch upon oil if we could, if
Sure.
we have time for that.
Sure.
Because that's another one.
What's a good ETF for that one?
Well, I know a commonly held one is just oil, OLI. I think that is an ETN though. Let me double check that. It's got a little bit different characteristics than your classic ETF. It is an ETN, but that is one I know a lot of advisors look to incorporate within their portfolio.
And do we have 1-2 on this as well?
I believe so. Let me double check that.
I believe that's
Yes,
what I
quite
have
so.
up here. And that's good. Okay, so we're long this. It is moving up. I saw a story, something about, this is the right one, right?
Yes.
Make sure we're not talking about some stock that is there. But yeah, so some moderate objectives on the upside. So oil looks fairly positive. Look like, what is this number though? 2632. I don't know what that is. It's not related to the price of oil like gold is.
It's not a simple clean cut because it is an ETN as opposed to an ETF that's basing it off of the primary asset.
Yeah, because maybe we can look at the actual futures on this thing to get a better feel. But anyway, this is showing a move to 2630, 2670. 78, and it's currently at 25. So not a lot, 5 or 6% on the upside at the moment. But you got a 0.48, 0.61, and the 40 is flat here on the PPMs. So that's in at least in a trend mode on 2 levels, and that's how the emerging trends start. So maybe you could go to these other objectives here. It's like 27, 28, but I guess that would be a little closer, 10, 12% gain on this particular item. So that's not too bad.
All right, for stocks, we can take a look at Forest Laboratories. That's ticker FRX, and that is on the 3.2 system.
Okay.
This is another commonly held security.
Is it? Okay. This isn't like Forest Oil or something, is it?
Let me double
Forest
check.
Labs. This looks like a different. Yeah, so we bought this at $37.52. Let's go over and put this in. What was the symbol again, Mitch?
FRX.
FRX. Okay.
It's a pharmaceutical.
Right. Okay. So if we look at this, I just want to see holding period, some of the stats out of BPM. It's a big gap. Are they getting bought out or anything? See this huge gap up here.
Let me take a look. Maybe
Let me go back over to the trade station and see what we got over there. Yeah, it's there too. There's something seems to be going on there. So anyway, there was a very brief objective for the stock to go to 143, and it was negated pretty quickly. I'm going to go back to VPM here, and matter of fact, I'll get us out of the way for a second so we have a little clearer view. You can see this symbol, as I mentioned, was bought at 37.57, and the expected hold for this thing. I want to get over and look at the trade profile here. This looks like it's been long for a while. See if we can see what's going on there. That is in a hold right now. So we've been long at 277 days. 204 is the typical holding period. Also it's exceeded all of its usual gains. 39.35 is the average profit made, and the projected profit standard deviation is 92. So it even exceeded that. We're now up 150.38, and that is as of I believe yesterday's close. If we go to the real-time quote here, I think we'll get a updated version of that.
Yeah, this does look like I just did find a press release saying that Activist PLC was looking to acquire them back in February. Haven't yet been able to see if that actually is going through or not. Right. If that's a deal that failed, yet it stayed at the new price.
Yeah, so we're up to up 152. The stock is actually up almost another percent today. It's up 0.88. So this thing's on a run. It is starting to look like it's getting a little tired. If you look at the PPMs, they over here, and let's go over to TradeStation and be a little better. And you can see PPMs, while they're still expanding, they went into that mode where they peaked out early off of that gap, and now they're in the maintenance mode. But we got huge numbers: 0.45, 142, and 0.185 on this, and that's really, really big. Those are big momentum numbers. So that means we've got the support coming in at 88.05. The old Bob/Dr. Gibbon would tell you if it gets close to the 90, you'd want to be buying this stock against that moving average. And typically, what happens in this type of pattern is the first time it hits this 21 after it expands out, it will make a new high. So there's plenty left in this stock. And one of the things I just want to comment. Come back on screen here for a minute. One of the things I want to comment, this is kind of a common thread that we see, and maybe Mitch has been picking all these stocks. Maybe he's hand-picking these to look like this. But they all are very positive, or the patterns that are there even are consolidating in a sideways range, getting ready to move back up. There seems to be an awful lot of stocks. Even going through a random list of the top 25, I don't remember the numbers, but there was like maybe 4 or 5 of them that were actually negative. They were even neutral or positive, and some of them were in, more than positive. They were in huge uptrends. So that's pretty typical, I guess, of a market like we have here, and that's why I continue to believe that we're really not really going to do much on the downside here at the moment. So
yeah, of the 25, only 2 were negative. The majority of them, when we went through them, were neutral or neutral was slightly positive.
Right.
But 48% were still positive focused.
Yeah, and that pretty much reflects what the database reflects as well. We're
right.
About 50. We're close to 60-40 now. That 60% of all the stocks, we have 18,400 stocks are positive right now or trending, is what that really means. That they are in some form of trend at some part of the cycle that we can do. And Mitch, we should make a note. I have an interesting for process warriors. Okay, so is to be able to review kind of the VPM investment cycle and go through that. I think that would be pretty interesting, not just looking at these holding periods, but looking at some of those things. So I make a note of that. I have a small video in our old archives, ancient video now from 2008. I looked a lot younger then. I looked at those the other day. I haven't aged as much as the typical president, but yeah, it's getting scary. Anyway, we got about 4 minutes to go, and I think we'll come back here on go back to the. You have one final, maybe a quickie that we can go through.
Oh, I thought about throwing up nuclear up there just to chide you a little bit. But how about your favorite airlines? LUV, love.
Oh yeah, it's my own private airline. Let me. I just want to do something here real quick.
And that is on the 1.2 system.
Okay, and I just went 3.2, right? So
I believe so, yeah.
LUV. Wow, this thing's on a tear, huh? As a matter of fact, a lot of the airlines, if you look at the airline indexes, there's been good ones. And Delta was even, all of them are good trades, I believe. I don't think there was a bad trade in a lot. So we want 1.2, right?
Correct.
Okay, so that one's in and out a little more. Actually, right now both models are running. And real quick, there we go. Real quick, I actually have the new VPM Market Mind that's going to be available for this platform. And we're going to start probably talking about that next week. We're working on the install set and all kinds of fun, exciting things going on there. So we're getting close. I've been working on this project for about a month and a half, and we've actually speeded up some modules that have some really cool stuff. So we're getting close. So in closing moments here, we've got 0.131, 0.19, and 0.171, and those are pretty screaming numbers. This is a big trend. Right now, the trend is not expanding. You see that the 40 is moving the fastest at 171 and 130 on the 10 and 119 on the PPM2. So what's going to happen is this 40 is right now playing catch up. So we have pretty much exceeded everything that was out there. I wonder if how much time we got left? Minute. So let's go over to VPM real quick and see if I can just look at a couple stats, and we'll sign off here for the day.
Yeah, we haven't quite hit the average duration. We have exceeded the expected profit though.
Right. So let's go ahead and look at trade profile since you've highlighted that, and that's where we'll finish here. So yeah, so we've got we're about 30 days, and those are market days, so that's about a month and a half short of having the duration. Average gain was 26. We're up 71. Even the standard D, we're still under that at 109. So this is got a huge 229 on the ER ratio. So this is a big stock. This stock does well in the system, and the company continues to strive. But yeah, look at that. That's pretty parabolic. But we still have another 30 days, but we've exceeded the mean profit, but not the standard D. So let's go ahead and let's go back to our location on the New York Stock Exchange here, and yeah, just signing off for today. We had a complete failure yesterday in Process Warriors trying to show you how to use a spreadsheet. Of course, we got it working right off after we were off the air. But we're going to.
That's how it always goes.
Yeah. So tomorrow, Process Warriors going to still talk more about implementing, combining some strategies, trying to get more of a context within the practice and how to use our entire process and how to authenticate through suitability classes and those type of things. Do you have any other thoughts, Mitch?
No, I mean, you hit the points right there. So
Yeah, so we are, it is 1 o'clock New York, and that means we got to go. And we'll talk to you tomorrow at the same time at noon. Get some lunch, come and join us if you're East Coast, get breakfast on the West Coast, and we'll see you tomorrow. Thanks again for coming. We appreciate it.